Good morning, everyone. Thank you very much for joining this webinar, Buying a Home in the Netherlands today, and taking some time out of your most likely busy schedules. To introduce myself first, my name is Ludo. I am an expat buying manager at Expat Housing Network. Myself, I'm working predominantly in the Amsterdam area, the greater Amsterdam, how we call it. So also Almere, Amstelveen, Zaandam, Haarlem, just pretty much everything around. I am from the Netherlands, born and raised. However, I've lived in the USA for around 3 years. When I was younger as an expat child, so together with my family, we went there. I am a proud father of not one, but 2 little tigers. If you guys are lucky, they might show up on the screen today. And I actually currently live in a new build property in Amsterdam North, to be precise. Obviously, I don't run Expat Housing Network by myself. We think greatness is achieved in the agency of others. What does that mean? Is that we have a fantastic buying team as well. We have Katie here, who is with us today. Katie is managing the Q&A. So if you guys have any questions during the webinar, please feel free to put them in the Q&A section. She will be answering them. And if there are any questions that are unanswered, we will answer them at the end of the webinar, actually. But as you can see, the majority of my colleagues are not from the Netherlands. So we have Katie from Cyprus, Giovanna from Brazil, Rick, born in the Netherlands, but has lived in Colombia and South Africa. Ellen has spent a majority of her time in Thailand, and Rafaela is also from Brazil. So people from here and there. Brief introduction of EHN, just so to introduce ourselves as a company. We are no traditional real estate agency. What do we mean with that is that we help only with buying properties and with helping people find a rental property. So we don't sell properties, we don't let properties. So we are really specialized in securing homes and making sure we can find the right property for you. We charge a fixed fee. Instead of charging a commission, means that there is no incentive for us to have you buy at a higher price. We think it's not fair to charge you more if you're buying at a higher price range, because in generality, it's pretty much the same trick we're doing. Like we mentioned before, a majority of us have lived in a different country or actually from a different country, so we know what it's like to settle somewhere else. Added value of EHN. Also important. Obviously, selling agents take offers from a company, and especially EHN, more seriously. 9 out of 10 times it's possible for us to book viewings when it's no longer possible. So selling agents will have specific days for people with buying agents, so that when the other days are full, 9 out of 10 times we can still come by and make sure you can have a look at the property. Very important one, we support by reviewing Dutch legal and property documents. It's quite a hectic system here in the Netherlands, and the funny thing is the majority is in Dutch, actually. So it's very nice to have people supporting you that are Dutch speaking, but also have a background in Dutch legal studies. The second most important one, I would say, is helping to find the market value. We'll touch base on this a little bit later as well, but it is very important to know what the market value is, as this is the amount that the bank will give you, or the max amount that the bank will give you. We'll obviously inform you about the rules and regulations, and we will make sure you don't make the same mistakes that we did in the past. Well, I'm not here by myself. I'm here joined by Robin from Mr. Mortgage. Robin, would you like to introduce your team?
Yes, definitely. Thanks, Leo. So my name is Robin Uijtdehaage, although my haircut has different, still the third one from the left. And I'm always joined by my wonderful team of Cesar, Egle, and Uskan, where Cesar and Uskan and myself, we are your financial specialists, and Egle is our growth marketer. And Uskan, most importantly, is our, well, you can call him kind of a mortgage wizard or mortgage Google, however you want to call it. He knows everything actually, and anything you need to know about every specific rules and regulations, and everything you need to know. So that's a very nice go-to. Cesar and myself have each of us over a decade experience in the housing financing. So that's that allows us to be able to get you the best option out there, because that's in the end what we do. What we want to do is when you come to the Netherlands, you find a new house or you want to move to a new home, it can be a bit of a maze. Not only finding the house, where obviously Ludo and his crew will definitely help you out with, but it's also good to understand what is the best option for you out there. You can go to a bank directly, your own bank, sure, it might work, but you're not entirely sure if that's the best option for you, and they will just give you basic information essentially, and they can only sell their products. Where we have a sole focus on you. We're not linked to anybody, so we're completely independent from any bank or something. So our primary focus allows us to really focus on you. So what is your situation? Not only what is your maximum mortgage that you can take out, but what makes sense to you personally. So that's the most important thing, to make it personal, because you're buying your home as well, and it doesn't really get more personal than that, obviously. So that's what we enjoy doing. Each of us have experience of either living abroad, of the area that we lived in or raised, always a lot of different cultures, and that's kind of what brings this team together as well. The interest in different people, different cultures, understanding that as well, and then the passion to well, essentially get you to the new house that you want to live in, and also to have you sleep soundly at night, that you don't have to worry about your finances, because that's the most important thing, because then you really can enjoy your house, of course. Now, that's what we help you with together, obviously, with Ludo and his team. So again, I'll bring it back to you, Ludo. Take it away.
Well, like I said, let's add value to you. That's the goal. We believe in sharing information freely. Not always the case in real estate, but we think it's well, it's not rocket science, but it's also not some kind of a state secret. So we should be sharing that freely for sure. Some things that are good to know. I think I'm going to go right back to you, Robin. The National Mortgage Guarantee. What can you tell us about that?
Yes, it's very good that you mentioned it. So this year, in 2022, obviously, the limit for National Mortgage Guarantee is 355,000 euros. What that means is, well, you can see already that it changed from 2021 and it increased. First off, this limit is based on the average selling price in the year before. So in 2023, it will be determined around November, start of December. The new limit for the National Mortgage Guarantee will be set for next year, 2023. So that will be the average selling price of houses in the whole of the Netherlands. So they will most probably be a bit higher again. Now, what does it mean really? National Mortgage Guarantee is a kind of an insurance arrangement in the sense of that, let's say you buy a house, and first of all, let me tell you, it's not necessarily, this situation is not something that we expect to happen, but let's say it does. So you buy a house for 300,000 euros. You close a mortgage under the conditions of National Mortgage Guarantee. It's not a bank, it's just an addition you can include in your mortgage with any bank. And then you can say, okay, under the conditions of National Mortgage Guarantee, I want to close my mortgage. It's under 355,000 euros, very good. So you buy for 300,000 euros. Now, 5 years later, turns out that you bought the house and it wasn't really so good. Maybe the maintenance wasn't doing so good, or the area that you bought the property in wasn't really good. So what could happen in 5 years, that the property value has decreased. So let's say it has decreased to 280,000 euros. That's not what you want, of course, but the only issue is if you actually sell the house. If you don't sell the house, there's no problem. But let's say disaster strikes even more and you lose your job without fault of your own, first of all. That means that you might not be able to pay the mortgage anymore. If that means, and that could be that you have to sell the house. Now, that's kind of the perfect storm. So you lose your job, you have to sell your house, and the value of your property is lower. To make it even worse, the property, your mortgage that you have repaid to 290,000 euros. So what it means, so what it means is that your value is 280 and your mortgage is 290. So that means that if you sell it, you still have a gap of 10,000 euros. And that on top of you losing your job, that's not what you want, of course. And this is specifically where the National Mortgage Guarantee comes in. They will then pay that remaining debt for you. They don't do that out of kindness of their hearts. You have to do a one-off payment to buy yourself into this National Mortgage Guarantee. 0.6% of the mortgage that you take out. You can forget about that specific number, of course, will help you along the way. And if I'm not mistaken, it will come up later in this presentation as well. So there's a one-off buy-in to get into this National Mortgage Guarantee. Now, as mentioned before, I don't necessarily expect property values to decrease by that much that you have a remaining debt if something were to occur. So why would you still take this insurance arrangement is also because you close this, the bank that you close the mortgage with knows that you have this national mortgage guarantee. So they also know that if we secure a mortgage for you, then they already know, okay, there's an additional security. If a bank knows that you have additional security, they will lower their interest rate. And that's the benefit, the main benefit that you would have. So for one, you have mainly a psychological benefit that you just have peace of mind that you know if something happens, the National Mortgage Guarantee has your back, but also you have lower monthly payments due to the lower interest rate that you have. So that's pretty much what that means. And again, 2023, most probably that limit will go up a bit. So if you buy in that range, you might have that additional benefit as well.
Cool, thank you very much. Yeah, definitely something to keep in mind. If you are able to make use of the NHG, it can be a very beneficial thing to do. Definitely. Alrighty, transfer tax. Well, this is something that I mentioned before for the people that are between or at least under 35 years old. Two predominant rates of transfer tax. We'll touch base on the most common one first. That is the one that we see totally on the right. So let's work from an example point of view. We have Kate and John here. They're both 35 years or older, it doesn't really matter that much. They're purchasing a property that is over 400,000 euros, in this case 500. Very standard procedure, they're going to use the property as a residential property and therefore both paying 2% over their share of the property. So Kate pays 2% over her 50% share, John pays 2% over his 50% share, coming to a total of 2% of 500,000 euros. You also have an exemption. If we go completely to the left, there Kate and John are actually both under 35 years old, buying a property of 400K, could also be under 400K, that's the threshold. In this case, they're actually able to make use of the transfer tax exemption. This is very nice because then instead of paying 2% out of your pocket to pay for the transfer tax, you're paying 0%. And therefore being able to save up to 8,000 euros. So that is a very nice one. Now you have a funny one. That's the one that we see in the middle. Kate is actually over 35 years old. In this case, she's 37. John is under 35 years old. He's 33 years old. Again, buying a property of 400K or let's say lower. Kate, in this case, is over 35 and therefore is unable to make use of the exemption and has to pay 2% over her 50% share of the property. Now, John is actually under 35 years old, so he can make use of the exception and therefore pay 0% over his 50% share, coming to a total of 1% transfer tax over the purchase price. This is the most common transfer tax rates that we see. Now we also have a third one, that is the 8% transfer tax, and this is when you are buying a property for investment reasons. But well, not very important for this webinar, but if you are buying, let's say, not only for residential purposes, the 8% transfer tax is applicable. So something to keep in mind, if you are both under 35 years old and you are just able to buy under 400K, it can save you quite some money in your closing fees. On the top, or sorry, on the right bottom, you see visit the transfer tax checker. Have a look after the presentation slides are shared with you. You can press that button, fill in some personal details, specific situation, and then the calculator will actually give you the amount of transfer tax that you need to pay. All right. Well, maybe a little bit strange that we're going to talk about renting in a webinar that is dedicated about buying a home, but let's see what the difference is between the two, right? Renting versus buying. Why you should rent? Well, let's not look at this slide for too long, but there are some things that are very positive about renting a property. First of all, renting gives you a lot of flexibility. If you're renting a home, 9 out of 10 times you have a 1 month notice period. You can drop the house pretty much whenever you like and move on to either a next adventure in a different country or to a potential different property within the Netherlands. So there are not a lot of ties tying you down to the actual property itself. Besides that, pretty much no taxes or maintenance. So it says here no taxes and no maintenance. That's not entirely true. As the majority of you know, waste tax or garbage removal tax is one that the tenant has to pay. Small maintenance like a faucet or a shower head are things that are also need to be covered by a tenant. But the big things like window frames, the facade, roof, leakages in the kitchen, etc., that is all for the landlord. So big costs like that will not need to be covered by you. And the last one, no down payment is required. With down payment, we mean a payment to actually get started within the rental process. Obviously, you need to make a deposit, but the deposit is something, if you do keep the house in a nice state, get back at the end of the rental period. Down payment is more, and we'll touch base on it later as well, but costs like a notary fee, transfer tax, and things like that. Then some cons that are relative to the things I just mentioned. Obviously, when you're owning a home, you need to pay some taxes. Maintenance is all for you, and it's definitely harder to move, aka no flexibility. Do have to say, in the last couple of years, it's been quite easy to sell your property, and therefore flexibility has been higher. But now, with the market shifting a little bit, we see that it's becoming more and more difficult to, or less and less easy to sell property. So it's in that sense a little bit harder to move. Well, we hope you're still interested in buying a home, because there are definitely enough reasons why you should buy a property. First of all, it gives you a lot of stability. No one is going to tell you to leave the property as long as you keep paying your monthly mortgage installments. You are the owner of the property, and therefore if a crash in the market hits or anything else changes in your situation, at least you have your property that gives you stability, because no one is telling you to leave or to excavate the property. Besides that, the monthly payments that you pay are there to build up equity as well. Okay, you're going to be paying a bit of interest, but the majority will actually be equity, in the sense that you're putting the money back into your stone, so to say. So you're building up a partial wealth there. And currently, this might change in the future, but currently there's also a mortgage interest deduction, meaning that even though you are paying interest every month, at the end of the year in your income tax, you can actually deduct a percentage of your mortgage interest, making it more and more interesting to actually buy a property. Then some things that correlate again with the things that I just mentioned. Rents will or are expected to keep rising with the lack of supply, especially in Amsterdam. Rents are going to keep rising. I think it was in the news last week that now more and more people that are moving to the Netherlands underestimate this part, also underestimate the lack of supply, and are now staying in hotels for months, actually in the search of a property. So in that sense, the rents will definitely keep on rising. There are no tax benefits when you're renting a property, and there's no creation of wealth. All the rent that you are paying is going directly into the pocket of your landlord. I always say it like this: if you're paying rent, you're pretty much paying off the mortgage of your landlord instead of paying off your own mortgage. All right, then maybe the financial side of renting versus buying, Robin.
Yes. So first off, I'm happy to say, so one of the first things you see is the interest rates. They are approximately 4%. Now they are decreasing a bit. They increased quite a bit as of the start of this year till about a month ago. And now we can still see a decrease there. So first off, let's start with good news. Now we made a comparison of two similar properties in the same area, approximately same square meters, approximately same finish, pretty much. And then you can see what the difference is between the two. So when you rent a property, then it's approximately 2,500 euros for this specific property. Whereas if you take a mortgage on this property, then that monthly payment, based on the 4% interest rate and a duration of 30 years, it's the basic interest duration of your mortgage, and then your monthly payments would be 2,363 euros. So first off, then you see with comparable properties, you already see that the monthly payments for your mortgage is usually lower. It's even lower now because the interest rates are approximately 3.7. That being said, when you, Ludo already mentioned that when you pay rent, essentially you're paying somebody else's mortgage off, or at least you don't get anything back apart from just the joy of living there. But I just see the question coming in. The interest is 4% per year. That's correct. So it will be calculated back to a monthly payment. So then that monthly payment of your mortgage, let's take a look at that, because then you can see it doesn't only consist of interest payments that you do, but it also consists of repayment of the mortgage. So you can split it apart. The first month of your mortgage payment, the interest will be the highest when it comes to the specific amount, because you always pay interest over the outstanding debt. The first month you pay the outstanding debt is still the highest, because the next month you already have repaid something, and that decreases over time. The interest that you pay in the first month is approximately 1,650 euros. So that's the actual amount that you lose. That's money down the drain. Sure, you get a tax benefit over, but if we set aside that, then 1,650 euros is something that is down the drain. So you can compare that to the 2,500 euros that you actually would be paying on rent. That's also money down the drain. The repayment that you do on the mortgage, that's essentially saving money, because if you sell the house, expectedly you get that money back. If you compare that, then the purchase or financing cost for a property similarly as this is approximately 18 to 19,000 euros. The rundown of these costs will be coming up later in this presentation as well. So it's about 18 to 19,000 euros. So then you have to compare the benefit of the mortgage payments to the rental payments that you have. It takes you about 22 months to earn back that primary investment of about 19,000 euros that you did initially. So that means 22 months, so let's say 2 years, it takes you to earn back that investment. That means that from, let's say 2, but mainly 3, between the 2 and the 4 years, if you're planning to stay that long in a property, then it starts making sense to buy the property as well. Now, after 5 years, you have built up equity because you repaid on your mortgage. So if you sell the house, you get that equity back. This calculation is considered where you did not have an increase in value of the property, which is still expected to, might not be as explosive as the last couple of years, but still gradually property values are expected to increase a bit. But if it stays level, then after the full 5 years, the equity that you build up is 50,000 euros. When renting a property, you didn't build up anything, of course. And also, when you compare the monthly payments, when buying a property, it looks like a lot, but a large portion of that is repayment of mortgage as well, is 141,000 euros. But when you rent, it's 180,000 euros money down the drain, you don't get anything back. So that's also a significant difference of almost 40,000 euros where you do build up equity when buying a house. So that's kind of the cold financial rundown of the difference of renting versus buying.
Yeah, so keeping in mind that most likely the market will at least slowly but steadily keep on rising, yep. It makes a lot more sense to buy the property if possible. Yeah. Okay, all right, let's talk about some market drivers, as we all know that the market has been going up lately. And well, let's answer the question, what causes actually this price increase, right? There are a few things. First of all, there are quite some fiscal benefits currently in the Netherlands that incentivize it to buy a property. Few things. First of all, the tax exemption that we talked about before, this is the transfer tax exemption. So again, if you are under 35 years old, buying under 400,000 euros and using this exemption for the first time, you are actually able to use the tax exemption and therefore pay 0% transfer tax instead of 2%. There's an interest rate rebate. So at the end of the year, again, from your income taxes, you can take some interest off of that. No capital gains in the Netherlands, meaning that if you do make a nice profit on your property, you can put that money right back into your own pocket or to a potential next property. So no taxes or any gains on that. The last one, quite a nice one currently, it's the tax-free parent donation, Uijtdehaage in Dutch. Now, this is currently around 105,000 euros. That can be paid or can be donated via property towards a child or a direct family member. No taxes have to be paid over that. This is ending, however, so next year I think it's around 27,000 euros, and then starting from 2024, it's completely gone. So if you do have some wealthy family members or some family members who want to help you with the purchase of a property, this is definitely still the year to do it. Now, this is one we touched base a little bit later, or a little bit earlier, the lower interest rates. Obviously, it's been much lower, but compared to the last 10, 20 years, we're still on a rather low interest rate. Again, giving you a good incentive to borrow money, as well, money isn't free, but it is definitely cheap currently. As mentioned before, rents are still high and expected to keep rising. And a big one, the lack of supply, especially in parts like Amsterdam, where it's pretty much filled up. So the only way to build extra properties within the ring of Amsterdam is to take homes down and build some high builds. And a lot of parts of Amsterdam are protected for this. So the expectancy of actually adding supply within within Amsterdam is very low. And the more properties are being built in parts that people don't really want to live. So lack of supply will keep on going as well.
Ludo, can I interrupt you and can you go back one slide, maybe?
Please, of course.
So one addition I want to make, thanks by the way, Ludo, it's the tax-free parent donation. Sure, this applies when your parents live in the Netherlands. When they live abroad and you get a donation from abroad, that keeps on being tax-free. So I might expect that makes a lot of sense to most of you guys checking this presentation right now. So, but by all means, check in with us if it applies to you, because then there wouldn't be a limit to the 100,000 euros. It doesn't really have any limit, because the tax authorities are happy that money comes into the Dutch economy. So that's just a small addition.
Yeah, perfect. Thank you very much. Yeah, no, that definitely makes sense. Robin talked about this already before. The purchase cost or the financing costs. Buying a home itself costs money as well, besides the actual purchase price. A few things to keep in mind. Let's just run through it. First of all, the transfer tax, as we mentioned a couple of times now, 2% of the purchase price, unless you're able to make use of the exemption or your partner is able to make use of the exemption. Can be 8% if you're using the property purely as an investment property. You'll need to go to the notary. You need to go to the notary for the transfer deed, mortgage deed. When buying a property in Amsterdam, you'll also go to the notary for the purchase agreement. So it can be a little bit more expensive, but depending where in the Netherlands you're buying, it's between the 600 and 1100 euros per deed. If you are going to be working with a bank or with a mortgage advisor, prices differ between 1,500 euros and 3,400 euros. Typical real estate agent between 1% to 2% of the purchase price, but as mentioned in the beginning, EHN charges a fixed fee. We'll touch base on the actual fees a little bit later on, but definitely a bit cheaper than 1% to 2% of the purchase price. Again, if you're going to be using a mortgage, then an appraisal is also necessary. An appraiser is a person who technically puts a market value on the property. So he comes into the house and drafts up a report that can be sent to the bank, generally between 550 and actually the price have risen a bit, up to 800 euros. Technical inspector around 425 euros, not obligated, but definitely advisable, especially in the older parts of the Netherlands. If you don't speak the Dutch language fluently, you actually need to have an interpreter present when signing the mortgage deed and the transfer deed. Depending on the language, and this is pretty funny, but depending on the language that you choose, prices differ between 200 and 300 euros, where English is 9 or 10 times the cheapest one. But you also have languages that are more rare or more special, so to say, and they are, again, a little bit more expensive then. Well, if you're buying a property, you need to make a 10% deposit. We'll touch base on this a little bit later, but if you don't have the 10% in your own bank account or you just don't want to use that money, you can also ask the bank to make the deposit on your behalf. In other words, a bank guarantee, and this is generally speaking around 250 euros or 1% of the guaranteed amount. The last one, NHG, if you want to make use of the NHG, then you have to pay a one-time fee of 0.6% of the mortgage amount. But that does give you access to lower interest rates, give you some more insurance, etc., etc. And if we look on the right side, there's a column asking if the costs are actually tax deductible. Now, as you see, everything that is related to a mortgage is actually tax deductible. So that's the mortgage deed, the mortgage broker, the appraiser, and the NHG. For some properties, the bank actually also asks a technical inspection. If the bank asks you that, then the technical inspection can also be tax deductible. Unfortunately, my costs are not tax deductible yet. I hope that will change in the future, as it's becoming more and more important to have a good real estate agent or a good broker on your side to consult and advise during the purchase process. All right, well, this is going to be nice as well. Some 3 tips to win in the current market. This is, I think, the most important one: value, value, value. What do we mean with that? Here in the Netherlands, we currently have, I would say, 3 different prices when it comes to the buying process. There's the asking price, as mentioned here, 395. Then there's a market value, and then there's a purchase price. In an ideal world, all of these prices would be exactly the same. However, we are straying farther and farther away from an ideal world. So again, not the case here. But let's work from an example. This property, asking price 395. Market value, we did a price research, appraiser came by the property, and the market value seems to be 415,000 euros. Unfortunately, in the current market, it's not very common to buy at market value. 9 out of 10 times you need to overbid a little bit over market value. And when I'm talking about overbidding, I'm talking purely about overbidding over market value, as asking price currently doesn't say that much, as selling agents are able to list the property at any price as they wish to do so. Purchase price in this example is 435,000 euros. Why do I say I only want to look at overbidding over market values? Because in this case, actually the difference between asking price and purchase price is 10%, but the actual overbidding is only, and only in brackets, 4.8%, 20,000 euros in this case. Now, why is market value so important? Because another selling agency might have listed the property at 375 instead of 395. Still market value is 415, still purchase price is 435. In this case, the overbidding as seen in the land registry and seen as in the newspapers, etc., is not 10%, but in this case actually 16%. While still market value is 415, purchase price 435. So actually the overbidding is still only, again in brackets, 4.8%. So that's why a lot of people always ask me, Ludo, what do I need to overbid, or what percentage do I always need to overbid? And it's a question I don't like to answer, because I have no clue what the tactics of the selling agent was. Sometimes we have cases where market value is 415 and the property is listed at 315. Then you already have to overbid 100,000 euros to match market value. So it's very strange that there are no regulations there. I know in Belgium, for example, you can only list a property either 10% lower or 10% higher than the market value. Here you can literally list it at 100,000 euros if you like. Not a very smart way to do it, in my opinion, but technically speaking, it could be a possibility. So that's why it's very important to know what the market value is, because only once we know the market value, we can come up with a competitive offer. And this will be important within the closing of a competitive bid. Now, a winning offer is important as well. Why do we say that? A winning offer doesn't always have to be the highest offer. It means offering a good price. And it becomes a little bit technical here, but as we mentioned before, the bank will only give you up to 100% of the market value. So in the example before, if the market value is 415,000 euros and we offer 500,000 euros, fine, but that means that we need to have 85,000 euros out of our pocket to cover the difference. If we don't have that, then we are unable to actually move forward with the purchase process. So if we offer a good price that correlates with the value, but also correlates with the amount that we have in our own pocket, we can actually make sure that we offer the most security to a seller's party and make sure that they are also confident that we can move forward with the purchase and have enough funds in place to actually do so. Well, this is a little bit in line with the second bullet point, offering security to the seller, but this also comes to, for example, the financial clause, something that most likely everyone has heard of a little bit. This is a clause that you can add into your offer saying, I need at least X amount of mortgage to move forward with the purchase. So to work again with the example that we mentioned before, if the purchase price is 435, we can say we also need at least 435,000 euros from the bank to complete the purchase and move forward with the purchase. However, in this case, there is still, even though the purchase agreement is signed, there is still a possibility that the bank will not give us 435,000 euros. And if they reject our application, then we can cancel the purchase without any consequences. So in this case, the risk is still a little bit on the plate of the seller. What we can also do is say, well, we'll offer 435, but we only need 350,000 euros from a bank, saying that we have quite some own funds to cover a difference, and we are not fully relying on a mortgage provider for this purchase. So you're taking a little bit of the risk away and putting it on your plate. You can also say, I don't need financing at all to move forward with the purchase. Of course, you're still totally free to apply for a mortgage, but you're taking the risk completely away from the seller's party and putting it in your own plate. And well, within the current market, it's a little bit of a seller's market. So offering the most security to the seller will give us the most opportunity to close a good bid. Third one, offering the least amount of hassle. This, I think, has to do a lot with the technical inspection. This is not something that is obligated, but well, is in my opinion, especially in Amsterdam, quite a necessity. However, it does mean that between getting the offer accepted and signing the purchase agreement, you will have someone to come into the home, technically inspect the property, and there's another momentum in time to cancel the purchase based on some new information. This might be something for a seller to say, well, I just want everything to move very quickly, so we're going to move forward with an offer that doesn't have a technical inspection clause in there. I do have to say, nowadays it's quite standard to have it in your offer, because it's also just very, very nice to know what kind of maintenance you can expect in the future. So in my opinion, this isn't a very big hurdle within the bidding process. And the last one has become more and more popular in the last few months, offering a personal touch to your offer. And this can be as easy as just adding a little profile about yourself and a picture, stating who you are, what you do, and why you love the property so much. As the last few months, a lot of investors quickly wanted to, before the new rule, and I'll talk about that a little bit later, but there's a new rule that drives the investors away a little bit. Before that rule came in, a lot of investors were trying to buy a property, and we saw that a lot of sellers were actually not very in line with that and wanted to preferably sell to a couple or to a person that was going to love and take care of the property. So offering a personal touch sometimes can make quite a difference. So that is, generally speaking, what a winning offer could look like. Then the last one, doing your due diligence. This is a very important one as well, and obviously one that Expat Housing Network is going to help with most importantly. Technical inspector and the appraiser. This is the two appraisers, or sorry, two due diligers that are going to come in before signing the purchase agreement. Again, technical inspector, obviously someone that's going to technically inspect the home and see if there are any defaults. Appraiser to make sure that we have the right market value. So even if I think the value is 375, hopefully the appraisal will think so as well, because if it's much lower, then we'll need to cancel the purchase, as the bank will only cover up to 100% of the appraisal value. Now, my question to you guys is, do you book them before or after your offer is accepted? I'll give you a few seconds in the chat to fill that in. We see some afters, we see some befores. All right, well, I'm not going to hold the tension much longer. It's a mix of both a before and after, I see. Well, what the answer is actually the sweet spot is right here, and that is right after your offer is accepted. Now, why is that? Of course, again, in an ideal world, we'll have everything done beforehand, so that we have the most information before we make an offer. But as mentioned before, unfortunately, we don't live in an ideal world. And the appraiser and the technical inspector, they don't work for free. So they cost money, like mentioned before, appraiser around 500 to 800 euros, and the technical inspector around 425. If every time that you make an offer, you have to get these guys into the home, you have to pay their invoice. And in the last couple of months, it hasn't been very usual to get your first offer accepted every time. So if you're making 2, 3, 4 offers, you're going to be wasting a lot of money on services that you're not really going to be using. So what we do is if we get an offer accepted today, we'll try to get the technical inspector and the appraiser in, hopefully already before the weekend, so that we have all the information and all the reports in before we sign the purchase agreement. Typically speaking, it's around 1.5 weeks to do our due diligence, so that if the appraiser and technical inspector come in here, we get the technical report and the appraisal report here, we'll review it here, and then we'll sign the purchase agreement there. Then we still have a 3-day cooling off period, so this is 1.5 weeks, and in some cases, technical inspection or the appraisal takes a little bit longer. We still have a legal 3 days to cancel the purchase without any consequences, a so-called cooling off period, bedenktijd in Dutch. Well, a little bit of a greater timeline here. So again, how it looks like, you start the process here. We'll do our research from Uijtdehage's perspective, so the price research, property document review here, make sure what the market value is. Based on that, come up with a competitive offer, submit the offer, sit like this for a few hours, and hopefully get the offer approved. Then we'll have the 1.5 weeks of due diligence time here, appraisal, technical inspection, sign the purchase agreement, the moment that you actually enter a binding contract with the seller, where seller says it's going to sell, buyer is going to buy. 3-day cooling off period right here. This is where Robin comes in, presses the big green mortgage application button. On average takes around 4 weeks. I do have to say that Robin is Speedy Gonzalez and is able to do this process 9 out of 10 times quite quicker. However, I would say if you're working with a bank, sometimes things slow down a little bit, so on average 4 weeks. This is another hooray moment, a moment where I would say open another bottle of champagne, as when the mortgage application is approved, not a lot of things can go wrong anymore, especially from a buyer side, everything is arranged, so just waiting for the key handover. Around a week, 2 weeks before the transfer date is planned, we'll receive the statement of completion, fancy word for final invoice. This is an invoice that the notary sends with, well, my costs on their purchase price, Robin's costs, transfer tax, any municipal taxes that need to be paid, any admin fees and things like that. You're all going to pay directly to one notary via one invoice, and then the notary will pay everyone accordingly. Makes your life easier, and also makes it easier for the third parties that are sending invoices, because it's all going to one person. Before we actually go to the notary to hand over the keys and sign transfer deed and mortgage deed, we'll have a final inspection. You can see this as a final viewing, where you go into the home, make sure that everything is still in the same state as agreed upon. I've actually had a case where we bought a 3-bedroom apartment. In the time between signing the purchase agreement and going to the notary for the key handover, the sellers were like, well, it's 3 small bedrooms, why not take one wall out and make it 2 bigger bedrooms? Yeah, this is obviously not allowed, and definitely created some chaos. So that's why we go to the property for a final inspection to make sure that everything is still as we want it to be. And if things are not as agreed upon, yeah, the transfer needs to be extended or delayed, and the sellers need to make sure that everything is back into the old state. Well, assuming that everything is as we want it to be, we'll go to the notary, sign the transfer deed. This is where ownership is transferred from the sellers to the buyer. And you'll sign a little bit of a less nicer deed, the mortgage deed, where you are officially a debtor and the bank has some more control over you. But you do need them, so hey, you might as well sign them. Then you get the keys, again, a moment to open the biggest bottle of champagne, I would say, because that is when you are officially the homeowner. You have around, and it's a little bit of a gray area, but around 2 months of a liability term. I do have to say, I always tell my clients 2 weeks. Why do I say that? Is because if you are at the end of your 2 months period only going to find out about small things, then it's a lot more difficult to go back to the seller and say, hey, you need to fix this or that. If you do it within the first 2 weeks, open all the windows, open all the heaters, do 100 dishes and whatnot, then it's a lot easier to go back to the seller and say, well, things are not as expected and not as mentioned in the final inspection, so please come and fix this. All right, some FAQs. Katie, do you want to jump in on this one?
Yeah, sure. Thanks a lot for having me, and thank you very much for the presentation. I can't see the screen at the moment. Oh, yeah, now I can. Perfect. Yeah. Can I get a mortgage with a temporary contract or as a freelancer, Robin?
Short answer, yes, of course. You can, but there are a couple of things to consider. So let's start with the temporary contracts. When you have temporary contracts, well, even if you have a permanent contract, in any case, when you secure a mortgage, then you need a so-called employer statement. There's a statement where your employer confirms, well, this is the person that works with us, this is our information, contract information, so duration, until what time, start date, income, but also there's a little section and they can confirm if this lovely person continues to perform the same way he or she did and our financial situation stays the same, we intend to give you a permanent contract. So this intention is very important because it's an intention, it's not legally binding, they just have the intention to do that. It is sufficient confirmation for the bank to consider your income as indefinite, as permanent. So then that is the best way to, when you have a temporary contract, to still optimize your mortgage options. Usually employers can do that. If it's needed, we can also give them a call and just explain the situation, what you need and how that's situated. So that's basically when you have a temporary contract. When you don't have you do have a temporary contract, but you cannot have this declaration of intent from your employer, there can still be possibilities. Then we have to use the average of the last couple of years. Again, just be sure that if this scenario occurs, just check in with a financial specialist, for instance, with us, and we can explain exactly what that would mean for you. So temporary contract is pretty clear. You can, best would be to have this statement from your employer. As being a freelancer or an entrepreneur, a business owner, essentially, there are different considerations to make. When you look it up online, a fair chance is that you will read that you need at least 3 years history of your company. That's not the case. 1 year is sufficient, but that has to be 365 days or 12 months. So a full year, you have to have history of you being registered at the Chamber of Commerce here in the Netherlands, the Kamer van Koophandel in Dutch. That's where you have to be registered at. From that moment, we can consider your income in a mortgage calculation. 2 years is better, 3 years is best, then we can use the average of that time. It's a bit more less black and white than when you're employed, because when you're a freelance, when you're a business owner, it also consists of investments that you do, right? So then it also makes sense, but an investment can also have a benefit on your company on the long term. So we can also be more, we can have a better conversation with the bank stating, well, hey, this is a situation. This person has a 1 year term, 1 year history in the company right now, but maybe you transferred it from abroad to the Netherlands, so you actually have way more years experience in the company. So this is also where we come in and we can discuss this with the bank to be able to get you a better option in your mortgage. So essentially, yes, there are definitely possibilities, both temporary contract and being a freelancer, but it's very good to know exactly what your specific situation is and how to optimize your mortgage there.
Perfect. Thank you very much. So the next question would be, what happens if you want to leave the country after several years? I guess, yeah, Ludo, maybe you can take this one.
Sure thing. So, well, it's a fair question, as the majority here are expats, potential expats, or people that have plans to potentially move on to somewhere else after a few years. I would say three scenarios. First of all, yeah, quite straightforward, keep your home, but you also keep your mortgage costs. So you are free to leave the country, go somewhere else and just keep the property here, either for investment reasons, keep it as a vacation home if you want to come back to the Netherlands. As long as you keep paying your monthly mortgage installments, you are able to keep the property. Quite easy. Second one is renting out your home. Good to keep in mind, though, this is not as easy as it sounds. You do need permission from your bank, and there's a big chance that you need to change your mortgage type from a residential mortgage to a buy-to-let mortgage. There are some how do you say that, hooks and crannies that are there, meaning that, for example, you need, I think, 30% of the property value to either have been paid off or pay from your own pocket. Interest rates are a little bit higher. Correct me if I'm wrong, Robin, but I think the majority of this is should be correct. This is when it comes to renting out the entire property. We'll touch base on renting out a part of your property a little bit later on, but indeed it could be a possibility to rent out your home. Third one, and again, very straightforward, sell your property and keep the money that you've earned on the property, or at least the equity that you build up within the stones, and you do not have to pay any penalties or capital gain taxes on that. I would say these are the three most straightforward options when leaving the country. There are some other things, but that we'll discuss that if we want to talk about your personal situation a little bit later.
Perfect. Thank you very much. Which brings us to the next question. Can I rent out my house or a room in my house? Ludo, do you want to go for this one too?
Yeah, I think it's a 50-50 question, so maybe we can answer it both, Robin. From a buying agent or real estate agent's perspective, my answer is also always going to be yes, or at least 9 out of 10 times yes. Renting out a part of your home is quite easy. Renting out a room, you'll obviously have to draft up a rental agreement together with your roommate, but you won't necessarily need to have permission from your bank. Just make sure that you have a good agreement together with your tenants, because it is quite easy for tenants to get tenant rights in the Netherlands. And once a tenant has tenant rights, they are very, very well protected. So if at one point you want to sell your home and the tenant doesn't want to leave and actually goes to these tenancy organizations, or potentially goes to court even, then 9 out of 10 times the tenant actually has the most rights. So you'll have to sell the property with the tenant in it. And generally speaking, a property with tenants in the property is worth less than a property without tenants. Now, renting out a house is a little bit different. You'll need obviously permission from the bank, but currently there are also some regulations, and it differs a little bit per city, if you are allowed to rent out your property immediately when buying a home. This is called the so-called self-residency obligation clause, or the self-habitation obligation. That's what it is. So when buying a home, let's focus on Amsterdam here. When buying a home in Amsterdam, if the WSZ value, and this is not market value, not purchase price, but this is WSZ value. If the WSZ value is lower than 512,000 euros, you actually need to live in the property yourself for the first 4 years before you're allowed to rent it out. Even if your bank gives permission, even if you're able to buy the property without a bank and just paying in full cash, then still within the law, you need to live in the property for 4 years before being able to rent it out. Obviously, you can sell it before, but you're not allowed to rent it out. Every city has its own rules. So please do have a look on the website of the municipality that you want to live in. But it can be a little bit more difficult if you want to rent out your property immediately.
Perfect.
Is it a little bit different from a mortgage perspective, Robin?
Well, yeah, in a sense. So when you want to rent out your house, indeed, what you already mentioned, your full house, then you have to, you cannot use a common residential mortgage. You have to get an investment mortgage. And as you already mentioned before, it's kind of a baseline calculation. It's a bit more complicated than that, but you can consider that you have to input approximately 30% of the property value. You have to, well, let's put it differently. You can close a mortgage of about 70% of the property value as an investment mortgage. So if you already own a property and you want to change it to an investment mortgage, you have to consider that you can take on a mortgage up to 70% of the property value. Could mean that you already repaid a bit of it, so it wouldn't have to be an input of 30%. But if you buy it new, then indeed you have to consider that you have to input about 30% of the property value out of your personal savings. So that's when it comes to renting out your full house. Now, indeed, as Ludo already mentioned, when you buy a new home, you want to rent it out right away. Do consider where you're buying, because there are specific rules and regulations, and they're not very lenient there. Now, when it comes to renting out a room, that's not necessarily an issue. Let me give you the advice, by the way, the information. If you want to rent out a room and you call your bank and you say, hey, I want to rent out my room. Is that okay? They will say, no, 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 you can't do that. Specifically for the reason that Ludo already mentioned, because they are worried that if you want to sell the house, that they have tenant rights. So always, if you rent out a room, be sure that if you have a mortgage on that property, to include an eviction clause as well. That if you want to sell the house, that you give them 2-3 months notice, and then you can actually sell the house. So they then are not able to use their rights as a tenant to keep on living there, even if you want to sell the house. So that's basically it. Renting out a room is no problem mortgage-wise. Just be sure to know the tax ruling there, because when you rent out your room, your whole house, the income is not taxed, which is very nice. If you rent out a room, then the income is taxed above a certain amount. So just know what the specific numbers are there to be able to, that you don't embezzle the tax authorities, essentially. Don't do that. That's one of my big advices anyway. So yeah, that's basically it. Be well.
Find you. They'll find you.
They will, yeah.
For sure. Cool. Thank you.
Thank you. And then what is the 10% deposit that I need to complete, Robin?
Yes, so when you buy a home, Ludo already quickly talked you through the different aspects. So your mortgage, let's say we're at the spot where your mortgage got approved. Again, indeed, happy days, time to pop your first bottle of champagne. And so you have all the security, right? You know your mortgage got approved, so you know that when you go to the notary, the money is there and you can get the keys. The seller doesn't really know anything yet. Sure, you have this piece of paper that states that you have a mortgage, but you can just pick up your bags, go away, and drive into the sunset, never to be heard of again. So what is there is there's a 10% security deposit. This means that if you don't move forward with purchasing this property, so that you break the contract that you already signed, you have to pay a penalty of 10% of the purchase price. So let's say you bought a house for 500,000 euros, and you don't move forward and not go through the conditions in the contracts, you have to pay 50,000 euros to the seller. And this is where the 10% security deposit comes in. So usually about 4 or 5 weeks after signing the purchase agreement, the seller requires you to deposit 10% of the purchase price at the notary. The notary is kind of the spider in the web in this, so they will all keep all the funds. So to be sure that everything goes according to plan. If you then don't move forward with this purchase, this 50,000 euros that is at the notary will go to the seller. If you do move forward with the purchase, then this 50,000 euros will go back to you. It will be settled in the total amount of fees that you have to pay, and the remaining amount will go back to you. This is the basic situation if you use your own savings. Now, if you don't have this 50,000 euros available, you can also opt for a so-called bank guarantee, and this essentially means that the bank will say, hey, we guarantee that 50,000 euros for this person that wants to buy this house. So that means if you then don't move forward, this 50,000 euros from the bank goes to the seller, and you then have a loan of 50,000 euros at the bank. That's basically how that works. That kind of saves you having to input more of your personal savings if you don't have it available or you don't want to use your own.
Thank you very much for the good explanation. The next part will be Ludo explaining a little bit more about the timeline here.
Well, I think this is more of where the deposit should be made.
Mm-hmm.
If the mortgage application is approved here, deposit will be right here. 9 out of 10 times, so how I put it in my offers is we'll have 4 weeks to arrange financing, and then we'll do a week after that deposit.
Okay.
Depends a little bit on the situation. Sometimes the seller is a little bit more nervous. We'll have the deposit if my clients have a lot of cash in the bank account. We'll do it a lot earlier. Sometimes we'll do it 2 weeks after the mortgage application is approved, but generally speaking, 4 weeks financing, 5 weeks deposit. So that's the easiest, I would say.
Perfect. And what are your fees? Let's start with Ludo.
Yes. So the EHN fees, well, we have, I would say, typically speaking, 2 packages, Smart Package and the Complete Package. How it works, Smart Package is more for the independent buyer, for someone who is already a little bit familiar with the buying process. is comfortable with booking their own viewings, with joining or with attending their own viewings, and with doing all the third-party meetings by themselves. I'll still be here to do the most important stuff, like the property document review. I'll do the price research. I'll be in contact with the selling agent, see what kind of offers he or she has in, come back with that information to you, come up with a competitive offer, submit a competitive offer. And then, once that is accepted, do the third-party bookings, review all the documents that come out of it, technical report, appraisal report, purchase agreement, and we'll be there for the entire pre-transfer support. Smart package, quite standard, quite easy in that sense. Complete package, it's a little bit more elaborated in the sense that I also schedule the viewings for you. I'll also attend the viewing, so I'll be there to answer any questions that you have during the viewing, but more importantly, I'll be there to answer or ask the right questions to the selling agent, but also just to be there as a second pair of professional eyes, make sure the state of the home is as you want it to be. Again, do the property document review, price research, offer submission, etc. But when we're booking the third parties, I will also attend the third party meetings. So I'll attend the appraisal, the technical inspection, and the notary appointment, where I think technical inspection and notary appointment are most important. Make sure that everything goes seamlessly and smooth. And not only pre-transfer support, but we'll do the full transfer support, meaning that after the purchase or the ownership is transferred, we'll be there as a contact person during the liability term as well. As you can see, we also have another package. It's the new build package. If you're specifically looking for a new build property, the process is a little bit different. We actually have a webinar that is fully dedicated to buying a new build property, so feel free to check that out if you have the time. But obviously, when buying a new build, you can't go to a viewing because the property or the building is not there yet. But we'll be there to join you to developer meetings, selling agent meetings. We'll also do a piece of search there as well. We'll register at all the sources to actually find the most recent new build properties. Well, and a few other checklists that will come into play when buying a new build property. Smart package, 2,500 euros, complete, just under 4,000, and the new build just under 3,000. How it works, we ask a deposit payment for all the packages. Deposit payment is $499. This will obviously be deducted from the total amount, and only the total amount is only due completely at the end when we get you to the notary. So it's in that sense no pay, no cure if we don't get you there. So an incentive for me to run as hard as possible. All right, Robin.
Yes. So we work quite similarly. We also have a small down payment to get things started for the financial analysis first, because that's where we'll start. We'll always start with an introductory call. So you can schedule a call on our website. And there's always a free introductory call, and it's usually about 10, 15, maybe 20 minutes to kind of get to know each other, understand your situation, answer some of your basic questions. And then the next step would be a financial analysis. It's a check of what your financial eligibility would be. True, you can use online calculators or check in with the bank, which is, to be perfectly honest, pretty much the same, because a bank employee will just log on to their own website and check your mortgage options. But we do it a bit differently, because when you check 5 different calculators, even the online calculator that we have on our website, it has to use some parameters, whereas if we check your financial situations ourselves, then we can be way more specific and tailor the calculations to your specific options and needs as well. So we can then check, for instance, what part of your income can we use for the mortgage. So maybe you have some allowances that we can or cannot use, and then we have the specific number to the euro exactly what you can borrow. That's where we always start off. Then after we did the financial analysis, we'll have a chat and we'll discuss specifically what is the next steps, what are your options. We can run different scenarios. So essentially, we want to be sure that when you start your house search, so when you check in with Ludo and say, well, hey, this is what I want, you know exactly what you can get. That's where we start. So that's where the financial analysis comes in, 299 euros to get things started. Then throughout the whole process, every time that you find a property, or when Ludo finds a property for you, then we'll check, hey, what are the specifications of this property that might impact the mortgage or your financial situation? So what's the ground fees? What is the energy label, for instance? I know that's something that Ludo will check as well when it comes to the value of the property and how likely it is for you to win a bid. And we'll do that from the financial side of things. How likely is it for you to close a mortgage on it? So between the 3 or 4 of us together, we'll then determine, okay, how we can best set up this bid, for instance. So that's what we do throughout the whole process. And then similarly as Ludo and the guys from Expat Housing Network, only at the very end, just before you go to the notary, the remaining amount is due. You can see our fees right here. When you're a first-time home buyer, our fee is €2,999. Obviously, the down payment will be subtracted from that. When you buy a buy-to-let property, same fee. When you go over $1 million, then the application process is significantly more complicated and it takes more time. So then we charge a bit more. And when you already have your mortgage, but you want to have it increased for a renovation, for instance, or you have a specific interest rate, you want to have that adjusted, or you want to change from one lender to the other, that's also something we can do. And that's our fixed fee is there, €2,499. On our website, you can see our pricing as well, and there's a little tool that you can exactly switch on what kind of service you want, and you can see our specific fee there as well. We are not charged VAT, so we're not charging you VAT. It's a clean fee, including everything, so we're not charging you for any little bits and bobs. It's just a clean fee that we charge you, including translations, for instance. We don't charge you for speaking English, for us speaking English, or for checking into with your real estate agent, or the selling real estate agent, or the notary if necessary. We just want to give you a complete and clean service there. So that's basically it. And indeed, sorry to emphasize it, Ludo, but our fee is tax deductible, so you get back approximately 40% of this fee. So that's just a nice benefit a year after you bought.
Hopefully in a few webinars I can say the same.
Yeah, will be very nice.
For sure.
Perfect. So I've got a few nice questions here. The first one is for Robin. So an anonymous attendee is divorced in the Netherlands and has a share in the house he owns. Do I have to put that full amount in the new house, or can it be a lower?
Very good question. You can. You're free to do whatever you want, essentially. It's only a tax technicality. So essentially what it means is if you own a home, you sell it or you get money from it and you want to buy a new home. What the tax authorities say, essentially, if you already owned a home and you had a profit from that, from either selling it or parting from it at least, you have to input that amount that you already that you made as a profit into your new home. Have to are in massive air quotes. Why have to? Is because then in that situation, the total amount of your mortgage, the interest will still be tax deductible. So you have this tax benefit over the total amount of your mortgage. Now let's say it's 50,000 euros that you got from it, and you say, sure, I want to use 20,000 euros just for myself. I want to go on a nice trip or whatever you want to do. That means that 20,000 euros that you do not use in your mortgage, in your new mortgage, 20,000 euros will not have a tax benefit. That's basically it. Again, just it has some impact on your maximum mortgage capacity for your new mortgage. So have to check out what it specifically means, but you're not obligated to do anything. Just be assured that you know about what the consequences are.
Perfect. Thank you very much. Ludo, another question for you. I think this is interesting as well. What are the long-term protections for homeowners regarding natural disasters? So, for example, rising sea levels.
Yeah, good question. This is a question we get asked a lot, actually. And funny enough, something that the majority of Dutch residents don't think about that much because it's definitely a thing in the Netherlands, but because of all the dikes and the good water irrigation systems, we're not thinking about this too much. From a governmental perspective, there's not a lot of long-term protections in place. Obviously, besides the measures that they're taking to make sure that the rising sea level doesn't have too much impact, there isn't any insurance from their side specifically for homeowners. But this is why we always say take a building insurance, because these kind of insurances will protect you from things like natural disasters. or well, fires or things like that. So this is definitely where an insurance company comes into play, but there aren't any governmental or municipal regulations in play that protect you from these kind of things. I do say this, but while I was saying it, I know that, for example, in Groningen, there were quite some called earthquakes. And these earthquakes definitely had impact on the state of the homes and were ruining the state of the homes. And eventually from the government, there was a measure in place that if you were hit by an earthquake, or at least your property was damaged by an earthquake, that you can fix it up and get this reimbursed by the government. But yeah, that is the only thing currently that is in play. For the rest, get a good insurance. That would be my advice.
Perfect. Thank you very much. And then I have a last question for Robin. I think you have probably answered this before, but maybe just to make it a little bit more clear, can a buyer or owner rent a property while living in the same property immediately after they purchase it?
Yes, essentially that's renting out a room. So sure, there are definitely possibilities. There doesn't need to be any time that you live in a property necessarily. So essentially you could rent out a room or part of your property right away. Yeah.
Perfect.
Yeah, I do want to add to that, like mentioned before, renting out your full property right after purchasing it. Please keep in mind certain areas within the Netherlands, there is a self-habitation obligation, meaning you need to live in the property for an X amount of years before you are allowed to rent it out.
Yeah, right. Yeah, this question was specifically about when the buyer itself lives in the property as well, right? Well,
yeah, okay. Yeah,
but that's correct.
Whatever. Either way, full circle answered now.
Yeah,
for sure.
Perfect. I don't have any more questions. Thank you very, very much for today. It was really useful and full of information. And I hope you have a lovely day.
Perfect. Thank you very much, Katie. And thanks everyone indeed for joining the webinar today. Thank you, Robin, for being my right hand when it comes to mortgage related questions and mortgage related information. Like I mentioned in the beginning of the presentation, we'll share everything, not just the recording, but also the slides, so you can go through everything at your own tempo. We do have a lot of information on our YouTube channel as well, so feel free to check that out. You'll hear my voice, but you won't see my pretty face, but you'll see that there. Feel free to press this link as well to immediately come to a website where you can book a call with either me or Katie or one of our other colleagues. And then you can also scan this fantastic QR code to get in touch with Robin's team. That is it. All right. Thanks very much, guys. I hope you were able to catch some sun rays today. And then we will speak another time.
Bye, guys.
Bye-bye.
See you.